Good day everyone, I am Stephen Lihugo from Bitel Ed 2A. My professor is Ma'am Resen May Cortez in entrepreneurship, corporation as a form of business. So what is corporation? A corporation is a legal entity that is separate and distinct from its owners. Under law, corporations possess many of the same rights and responsibilities as individuals. They can enter contracts, loan, and borrow money, sue, and be sued, hire employees, own assets, and pay taxes. Corporations are allowed to enter into contracts, sue and be sued, own asset, and borrow money from financial institutions. So, what are the common types of corporations? A corporation can be created by a single shareholder or multiply shareholders who come together to pursue a common goal. A corporate can be formed as a profit or a non-profit entity. The majority of business are profit, and they are founded to generate money and offer return to their shareholders based on their percentage ownership in the company. Next is the non-profit. Charitable organizations which are dedicated to a specific social goal such as education, religion, science, or research fall under the category of not-for-profit organizations. Rather than distributing profits to shareholders, non-profit organizations put them to good use. So let's talk about what are the advantages and disadvantages of incorporation. The advantages are separate legal entity, independent from its owners and considered a legal entity that may conduct business, own properties, enter into binding contracts, borrow money, sue and be sued, and pay taxes. Next is limited liability. Company owners are only liable for the amount they invested. Creditors and lenders have no claim to the owner's personal assets for payments owed by shareholders. Next is unlimited life. Stockholders, shareholders, or members are the owners of corporation, and it is managed by their duties does not affect the continuity to perform entity. Duties entity only changes and the company's charter will enable to either be extended or liquefied. Next is easy transfer of ownership shares. Publicly held corporations do not require approval from other stockholders to sell the stocks or shares of individual owners. Stocks or shares can be easily traded in the market regardless of their volume. Next is competent management. Day-to-day business operations may not be handled directly by investors or owners. They elect the board of directors, which hires a professional management team thereafter. Corporations can obtain capital from a variety of sources. Next is source of capital. Corporation can source funds from selling stocks and issuing bonds. So what are the disadvantages of corporation? Cost of corporation. Forming a corporation is more expensive than forming a sole proprietorship or partnership. Next is double taxation. Two taxes are collected, one from business profits and the other from dividend payments to shareholders. Last one is the documents. Companies must file annual reports and tax returns as well as keep accounting records, licenses, and other vital paperwork in addition to their incorporation documents. So for today, that's all. I hope you learned something from my report. That's all and thank you for watching. Bye bye.